In this video, mentor Brandon, who's been with Trader's Edge for almost 10 years now, is going to talk about some of the tricks that he uses to analyze chart patterns and use some technical analysis as he sizes up how to manage these trades over 8 to 10 weeks. So you're going to love this one.
Market's down a bit today. We're having some movement, but that being said, I just kind of want to jump straight in. It's earnings season has been wrapping up, so the market's been moving. We've been getting back on track, which is awesome. Some good upward movement the last month and a half. And now I've been going through the forums and just see a lot of people having questions on what charts are good, how do I start a trade, just kind of basic management. So I really wanted to just go through that process with people. I have a good list of stocks that I want to look at to show examples of what is good, why do I like this, why do I not, different patterns that you can look at. So you can find some trades, not only just what Preston's showing, but things outside of that as well. Because we all need to have a good amount of trades for good diversification. So let's just hop right in. And then I will be taking a look at questions as we go over. But I'm not going to speak specifically on the particular trades that you guys are doing. Like if you want to put a question out, I'm happy to, that Preston's doing, but Preston will send out emails on what he's doing with the adjustments later in the day. So keep an eye out for that with those trades that he's doing, the Shopify, Adobe, all that kind of stuff. All right, well, let's just jump in. So right now, I use Thinkorswim. For those of you who don't know this platform I have, this is through TD Ameritrade. And we're looking at the S&P 500 right now. The S&P 500 is always where I start. It's the good, basic ground because it has the best collection of stocks to show just what's going on with the overall market. We're looking at a 1 year, 1 day chart right now. So as you can see, we had strong movement up for the last month. If I just kind of take a line from here to here. Now, when I'm looking at charts, I'm trying to look at a broad view. I'm not day trading. I'm not looking at the super individual candlesticks. I'm just really looking at the main movements. I'm trying to figure out how far up have we gone? When are we ready for a pullback? There's a term I like to use, overextension. And what overextension is just when a stock is moving up for a while, it needs to take a break. Nothing can go up forever, right? Everything, it's always a zigzag format. So it's kind of a 2 steps forward, 1 step back, 2 steps forward, 1 step back. And so here, as you can see, we've moved quite a bit up, but haven't had that break yet. Think of it like if you and I were climbing up a mountain, we would be going for an hour, and then suddenly I say, all right, we got a 1 minute break, and we got a whole nother hour to go. That's not enough time to catch your breath and get ready for a new movement. And that's what we need the market to do, is to give us that time. So here, the pullback is good. I would love if we can stay at this line. I use these horizontal support and resistance lines, really, really important. They just tell me where the levels are and if we're breaking through. But as you can see, we're bouncing off of this, and hopefully we're going to stay there and keep pushing up. But even if we break through, we still have a little bit more we can go, keeping that 2 steps forward, 1 step back idea. So I'm not overly concerned about where the market's at right now. We had such a move up. We're ready for that pullback. It's okay. But what I want to kind of shift with is, so now I want to talk about some chart patterns. What do I look for now that earnings season is done when I'm ready to jump into some new trades? And I have a list. So let me just start with the first one. Let's go from here. MRO. Also, what we're going through right now is the same process that I go through. I put out a quarterly watch list. So every quarter I put out a list of stocks that I'm really interested in and talk about when I would enter into them, where the support resistance lines are, all that kind of stuff. So this is really when I'm starting my watch list, I'm ready to get that going. How do I look at a chart? How do I decide to put it on the short list or just throw it away? And so here, again, I'm always looking at a 1 year, 1 day chart. And so we can see the broad movement. A lot of people like to think of the money price as a week to week trade, but I really think of it as more of a 3 month long trade, because we're making weekly adjustments, but we're staying in the trade from one earnings to the next. So if we're going to be in this trade for 3 months, we want to see, well, what's the broader picture? What is the broader movement? Because we want to make sure this trade is going to keep moving the direction we want for the next 3 months. So when I look from left to right, some big thing that I'm looking for is this higher now than where it was a year ago? As we're looking at that, yep, We're higher now than a year ago. We have this nice movement. Obviously, there's a big pullback here, but don't be scared of those pullbacks because the market had a collapse. So most every stock we see is going to have a larger pullback. And that's okay. It's what happens from that point as we're moving forward. Where do we go? And see how this bounced off a support and lifted. Now, when I'm putting these support lines together, think of them as pivot points. See, we come down and we bounce up away, and then we came down again here and bounced away. And we also used it as resistance where we came up and bounced away. So when I'm doing these, I'm trying to do longer term trends that connect multiple pivot points together and kind of piece it together. The better the support resistance lines, the more predictable the trade is. So let me actually take these ones off here. So with that, we have this stronger bullish trend. We have a bounce off of a support resistance line, right? What we then I'm looking for is stocks over $20. Now, the over $20 is for a couple reasons. One, I want to find like institutions. We're following institutional volume, and they tend to focus in on stocks over 20. But also, just for a practical standpoint, when we're getting into a trade, we want to get at the money. We want to sell right at the money because that's our best risk reward ratio. And I like to use delta. For those of you unfamiliar with delta, it's a Greek. It's just like think in your car. You got a speedometer. You have your fuel gauge. Delta is just a measure of speed. It's telling us how fast are we making money, how fast are we losing money. And it's a really great way to figure out the precise point of where your short and your long is, how much protection you want, all of that. But kind of glazing over that, I start when I'm selling a short, I'm always selling at the money. And using delta, I find a 50 delta, 50 with that. So let me actually jump over to XLE here. With XLE, this is an $80 stock, same bullish move that we like right over there. Now, if I go here and I'm taking a look, I always sell something 7 days or more to expiration. So we're going to look for next Friday. As a side note, you can get in any day of the week. You don't have to wait until Friday to get in. I always want to trade up into strength, so straight into forward push. So that could be any day. Just what I always recommend for people is that when you sell something 7 days or more to expiration. Give yourself a little time. Don't sell the same week with only 3 days left, because if something goes wrong, you have to make an adjustment and take a debit that you might not have had to otherwise if you just waited that full week. So we're going out to September 2nd. And when we go to at the money, see how I got a 47 and a 57? I got one that's pretty close to 50, right? It's in line with each other. If I go over to MRO, they're going to be a little bit wider of a spread. Actually, not on this one. This is a bad example. But when I look at 20 stocks are like $9, right? And they have these 50-cent wide spreads. Those trades are going to have the first out of the money delta is going to be like a 32, and the first in the money is going to be a 70 something. So you get this too hot, too cold, not this just right part. So the stocks over $20 really help us make sure that we're inside a range that we're looking for. Now, on the other side, I also want the stock to be over or under $450. That's my range. $20 on the bottom, $450 on the top. The stocks higher than 450, they just trade differently. They make bigger movements. You find yourself in the money with your short. You're having wide swings. So if you notice like you're in one of those stocks that's a higher price stock and you're noticing you're getting whiplashed all over, it's because it's in the higher price range. So I like keeping it inside the 20 to 450 area just to make it nice and easy. Now, inside of that price range, I'm also looking at these support resistance lines like I talked about. The more support and resistance I can draw, the better. I have a document, if you guys like, on just how I draw my support resistance lines. I'm gonna actually put in let's see, I don't know if I can, yeah, there we go, chat. So I'm gonna put it in my email address, edgenetwork.com. There we go, Brandon at tradersedgenetwork.com. If you want to email me, I have a document on support resistance lines because I want to get through a couple of charts. I don't want to talk too much about that, but these are really important because they tell us how predictable the stock is. Is it something that hits a point and comes off? Is everyone on the same page looking at the same thing? And here you see how we have these really nice levels, these bounces. I have another one right here that we're going up above. The more support resistance we have, the easier it is to trade. Other stocks might not have those support resistance lines, and I tend to veer away from those. The next thing that I'm looking for is volatility. So how choppy is the stock? How big of a movement is it? Think of it like if you're looking out at the ocean, how choppy are the waves here? And we want the waves to be just as volatile or better than what the market's doing, which is a little ironic right now because the market is so bad. But as long as we're better than this, and I'm just eyeballing it, I'm not using a data point. So see these swings that are happening up and down with that, right? I want to see those nice swings. I want to see less than that, really. And if I go to XLE, or we'll go back to MRO, see how we just have that one, but the rest of them are calm and controlled? And that's really the sentence you want to think about when we're looking at these things. We want to look at a calm, controlled, bullish trending chart, right? Calm meaning low volatility, controlled meaning good support resistance lines, bullish trend obviously moving up. So like this is one of my more ideal patterns that I would want to look for. There's other patterns though that we can kind of use. So one of them, CCJ. Now this one at first glance is going to look really volatile, right? Larger swings up and down. The thing that's different about this is, it is volatile. Well, I'm not going to lie, but this is inside a tighter range of price, smaller area. Also, you see how it's inside this nice sideways area? Sideways area is really helpful because it gives us predictability. It allows us to say, okay, this is the range. If we dip lower than this, then I know it's time to get out with it. But also notice how we're higher here than where we were a year ago again. So even though it's sideways of the bullish edge. Now, if I was looking at entering into this chart, I wouldn't want to enter in right now because we're pressing up against the ceiling here, right? Now, we don't need to have a pullback. We could either continue forward, lift up, break above that resistance line, and then I'm totally fine. I jump right in. Or we can continue lower and then bounce. The big thing here is I need space between where I am and where that resistance line is. I want to have some distance between where we are and that so I can make some profit before we hit that resistance and start to go lower or possibly go lower, hopefully go up. But inside this, I'm totally fine with a chart like this, just a nice sideways trend.